Alright guys, so this was the move that I caught on Friday, 500 pips from this zone to up. So now I want to tell us how I was able to get that trade, the psychology behind it all, and how I was able to get that trade, right? So this is 8 a.m. Sorry, this is 7 a.m. in the morning. Pre-London session, I always come to the charts to see if you can get an instant execution or we can get a pending order, right? So that was 7 a.m. I think I came late. I would have taken this place as my first entry. That fair value gap would have been my first entry. My first entry should have been here, probably target to this breaker block. You have a breaker block around this zone here, so this breaker block should have been my area of target, right? So my stop loss would have been very little, let's say around 60 pips. Yeah, my stop loss should be around 60 pips thereabout, and then my target should be around this breaker block, which would have given us about, I think, 400 pips thereabout, which is 6 RR. I would have targeted 6 RR and then probably leave the market, right? But then what happened? I missed that trade, so there was no need to chase the market. Since it was Friday, I was just chilling and relaxing for the market to give us a slight pullback. I was expecting something like this. After the close of this candle, I was expecting the market to go up a bit to this level and then dump right here, right? That was what I was actually expecting the market to do, but unfortunately the market did not do something like that. It was what I was expecting, so I can take the sell position, right? Because the market already tapped from this fair value gap around this side, so I was ready to strike. But let's see what the market did. Boom, the market gave us a first rejection from this point, right? This is 1 hour time frame. The market gave us a first rejection from this point, and let's continue. Let's see. Now look at it. A lot of traders were trapped from this breaker block. Like I said earlier, it looked like a breaker block where the market would actually bounce off from and start going up, right? So it was looking like this. I think to most traders, they saw this breaker block and we expected something like this, tapped into this breaker block and probably sweep this high and all this liquidity around this point. So we're expecting something like a shoot up like this, right? Which was actually a very clear setup. The setup was not bad, right? It was very nice setup. Breaker block, tap in, boom. But the market did not do something like that, right? The market did something else. And it was Friday. Like I said earlier, Fridays are always manipulated days, and I was very, very careful. I made sure that I was not in a haste to take trade, right? During the week, the market was kind of crazy during the week. So I was not really impressed. I was not in a hurry to take any particular trade at the time, which was Friday. So we saw the first move. The market already moved about 100 pips. I think we took a scalp from that point. Let's continue. Boom. Then we saw this huge drop, which broke this breaker block. So this is a breaker block. This huge drop, it broke the breaker block, right? So which means if we should extend this breaker block, we should be expecting more sells, right? Let's see if we could have gotten a sell entry from that place. So I think what the market would have expected the market from our strategy to do was retest this place. So here becomes a breaker block, right? Or an inverted fair value gap zone. The 50% of this whole momentum move, you can catch it down to this point here. Now bear in mind that since we had broken this breaker block, we had broken below, there was no need to look for a sell setup again, because the sell had almost already happened, right? The sell was about how many pips? The sell was about 500 pips, 400 pips about on a single 1 hour candle, right? So it was actually crazy. It was a crazy one. So the market already dropped so hard. And don't forget, we said that we were expecting the market to get to this zone before we could short, but the market confirmation from this zone was not given at all, right? So the market bounced off this breaker block and dropped and also break this previous breaker block. Now in that case, now we could only get a small, or should I say a short sell towards this area. Now why is that area our area of concentration? Was because we could see a fair value gap around that zone also, right? We could see a fair value gap around that zone also, so which made us look out for it, right? Let me zoom in. If you can see, we had the fair value gap around that point. This point and this point was a good fair value gap, so we started looking for our sell. Sorry, we started looking for our buy. Except the market does this exact thing. If the market retraces up a bit, and then it comes down to this place, this is where we'll be looking at to take our profit from, right? That will be our target for our TP. If we were shorting the market, I would have done something like this. Short the market from this zone down to this fair value gap zone, right? But I didn't think the market did something like that. The market did not do that. What did the market do? Let's see. Boom. So now we see that our order from this point was activated. That was how I got my entry from this point. So if you look at it very well, it was a sniper entry I got. So we got that sniper entry because we already cited that fair value gap from that point. Since the market had broken this particular breaker block zone that we expected by this huge momentum broke below, then we were expecting, like I said, I was on the chart expecting the market to retrace a bit to this 50% here and then dump to this point, right? That was what I was expecting the market to do. but the market did not get to that zone. The market just dropped instantly to our buy limit. So that buy limit was as a result of a fair value gap around this zone. We had different fair value gap also, right? We had different fair value gap also. We have this particular fair value gap. We have this particular fair value gap here. The market broke it, number one. We had this okay, I think that was this second small fair value gap. The market did not respect it, but the market finally respected this one. Now the reason why I went for this one was because I used to tell my students that whenever you have about two solid fair value gap, go for the second one, right? If this is the first fair value gap and this is the second fair value gap, always look out for this one, right? Because the market most times will use this first imbalance of fair value gap as liquidity, right? So the market broke through this first fair value gap and went directly to this one. So that was why we had our what do you call it? Our buy limit at that zone, and boom, the market tagged us in, and it was a very, very nice ride. So let's see. Right now, look at that zone that I was talking about earlier that I expected the market to reach. Right, that was the zone I was talking that I expected the market to reach, but the market got to that zone later. So which means this zone most likely will not be valid because the first move was what I was expecting the market to get to here before it retraces it down. But the market moved downwards immediately to this fair value gap. So that was how I got my entry. I got my entry using this fair value gap, and most times how I do my entry using the fair value gap, I use the first fair value gap and the 50% of the fair value gap. That was how I got my sniper entry, right? That's how I got my sniper entry. So I got the entry, I sent it to my inner circle, and we got the trade. This is how the trade finally played out. So you can see the market was moving, and boom, the market went above this particular zone, right? So this zone is actually very, very important for gold. The market, you can see the market was respecting it. It broke above the zone, broke below the zone, that has broke above the zone again. So what are we expecting? We're expecting a quick retracement to that zone, retracement like this, and then boom, up to clear this liquidity like we had anticipated before. This place is a buy side liquidity, so we anticipate to break that liquidity above, right? So let's see, let's continue to see if the market does that next week. So that is my entry using the fair value gap. That's how I took my entry. It was a beautiful one. From the London session, we were kind of skeptical if we can take the sell. The market broke through our previous breaker block zone with a huge momentum, and I anticipated this fair value gap to come to play, and indeed the market came to play at that zone. You can see two sniper entries running in profit, and this zone that I said is a very critical zone. You can see that the market has broken above. Now we expect a small retracement on Monday. And then that retracement will determine whether we can clear this liquidity above. So guys, we have a long way to go on gold. This is also more like an analysis for next week and beyond. So we have a long way to go on gold, right? We have a long way to go, but this particular zone must be taken out. What zone is this? I think this zone is 3252. 3252 zone, right? Must be taken out. 3252 zone must be taken out. So once we take out this zone, we know that we are back to be in a bullish trend, right? So our problem will just hold this trade till we'll see if we can break this this zone. So you can look it out and check if it suits your trading strategy. Look if it suits your trading outlook for the next week. Okay, for this new week rather. So look at gold. We're expecting more buys on gold. We already had an entry using our fair value gap around this zone, which is a very, very valid zone to buy. It was more like a discounted zone, and that's why we took our fair value gap entry using the 50% of the fair value gap, and boom, sniper entry, 500 pips upwards. Peace out.